Hey traders, Raghee here, and in this video we're going to talk about how to understand chop, because that is what we have right now. That is the market trend that we have. It's more formally known as distribution for you Charles Dow fans out there like myself. But I'm going to show you how we recognize this and just how many markets we have in this environment, and then subsequently how I'm going to start off this kind of early summer trading. What kind of tactic am I going to use? What kind of time frame am I going to focus on? So take a peek here at just this area. Now, if you contrast that area with this and really all of this, you'll notice a few things. One, a lot of green grab candles. Two, a very nice upward slope of the wave, the 34 EMA wave in this area. And we've been trading steadily higher after pullbacks. And pullbacks are valid to me as long as we have predominantly green grab candles and price action above these three moving averages that I call the wave. And the wave basically, gang, is the 34 period exponential moving average on the high, the close, and the low. Okay, so you see there's a transition that happened. The color-coded candles really highlight it right in there. Okay, you see that shift in the colors from green to blue? That in and of itself is not enough to concern me. But it was the ongoing shift, once again, from red, from blue to red, that told me that, hey, this is not an uptrend any longer. That's just how quick I can make that decision. And that now we are in chop. And the chop is all of that. All right. Now, do I have the same kind of advantage in a choppy market that I do in a trend? I really don't. In fact, traders can get away with buying higher highs, although I never advocate that. But traders can get away with these buys, right? Because the markets are going to make higher highs. So even though we get in here, and did, by the way, and in here, okay, even though those are what we're focused on, everybody sort of, as long as they're bullish, everybody wins, right? That's just the way trends work. They're very forgiving. There's a huge margin for error. But once we've gone to a choppy market, most trend followers don't know. They don't have the color-coded candles. They have no way to understand the difference between this and this. They just don't know. Broader market discussion, mainstream market discussion, really doesn't talk about distribution or accumulation, something Charles Dow talked about in the late 1800s, right? So this is very well-established market behavior and psychology. So in this area, I can be a buyer in here, but I don't have high expectations for taking the resistance out and punching up to higher highs. So I'm fine to be a buyer in here. That's fine. But I have to wait and wait and wait until we get down into that area. Otherwise, there's really nothing for me to do, which I'm willing and I'm open to doing that. But I have to wait for that zone in here to be hit. Otherwise, there's just nothing to do. In that meanwhile of having nothing to do and dealing with the chop, and this isn't just on the ES, gang. This is in a number of markets. I mean, take a look at Amazon. Very similar look, right? Look at the red and the blue and the green. Right? What else can we find this on? Take a look at something like Goldman Sachs, heavily weighted within the Dow. Take a look at a Johnson & Johnson. Right? What else do we have? Take a look at JP Morgan, heavily weighted within the S&P. So you can see this transition. How about we take a look at crude oil? Blue, red, chop, right? I can still be bullish here, but do you see the chop? So this is what I'm talking about. Lots and lots of markets have transitioned into this. So what we're doing in the room is we're really doing something that I've done for most of my career, which is I've shortened the time frame into summer, usually from Memorial Day to about Labor Day, just generally, but I'll be much more of a day trader through the summer months, or months where I feel the market clarity doesn't give me an edge in end of day trading. So we are focusing a lot on 1 minute charts and playing the open to about 11:30. I love this kind of trading. I can be done in 2 hours. It's actually some of my favorite type of trading, but it's not going to have the same kind of beautiful returns that I can see from a 5-month, 6-month long position in the crude oil market long, or in the bond market long. I'm not going to get this great, amazing, 8-10 handle move out of a day trade. But it's not about what I could make, it's about how I can minimize risk and what kind of market trend are we in. And that's what we're doing right now. So that's how you identify market trends. And again, I'm going to shorten the time frame and basically become a more nimble intraday, quote unquote, day trader as we go into summer. In the premium video, we're going to cover a lot more on what we're going to do tomorrow. I'll be doing the open with you all. We'll go through some tools and some setups and prepare for the morning. I'll see you in the next update.